It's the last trading session of Samvat 2075, and we here at BloombergQuint take stock of the year gone by and how the sectors and stocks have headed into the new Samvat. Welcome one and all to our Diwali party. Let's take a look at what happened as far as the markets were concerned. The Nifty and the Bank Nifty has managed to do well, but sectorally it was the real estate index that did well. It gave returns of 16% over the last 1 year. The Nifty Bank and the energy index have also moved 13%. Couple of sectors that haven't done well. The metal index, given the fact that there has been a global slowdown, was down 30%. The media index, mainly led by Z, was down almost 29%. And the PSU banking index is down in trade, while the private sector banks have done well. The PSU banking stocks have not done well. Let's take a look at some of the stocks from the Nifty which have managed to do well. BPCL gave the biggest return, up to almost 75% on news of the government divesting stake. Bajaj Finance and Bajaj Finserv have been outperformers, and they've done well as far as even their financials are concerned. Titan, no doubt expensive, but it's one stock which has managed to rally 60% over the last year. And ever since the inclusion on the Nifty, Nestle has been on a tear. It's up 44%. Couple of counters which haven't done well. Yes Bank, because of the issues concerning the promoter and what's happening in the company in terms of the asset quality, it's down almost 75%. Z also had similar issues in terms of the promoter entities. It's down 46%. The metal counters didn't do well. Tata Steel, JSW Steel down almost 40%, and that's why the index was down, and GAIL India was down 33%. Some bit of information on some of the alternate investments like gold and silver. They managed to give much better returns. So gold was up 22%, silver up 22%. So they have been bigger outperformers on the asset class. But let's break it down into some of the sectors, and we'll talk about what happened in the year gone by, what's expected, and we'll talk about some of the stocks that have managed to outperform. So firstly, Yash will talk about what happened on the FMCG and the retail space. Yash.
Good morning, Darshan. So it has been a challenging year for the FMCG pack. This whole slowdown which started with the breakout of the IL&FS crisis, which slowly trickled down to the other sectors, starting from autos and then onto the consumer discretionary space. That has impacted the overall volumes of most of the FMCG companies. So we saw volumes contract for most of these players. But that apart, the FMCG index, as far as the returns are concerned, has grown by almost 11% in the last Samvat. This was mainly on account of the gains that we've seen for the likes of Jubilant FoodWorks and Nestle, which were up almost anywhere between 46 and 45% in the same period. Now, important cues to take out for the next year is basically the impact of the government measures. Now, we've seen a healthy monsoon this time around after a series of monsoons which weren't that great. We've had one of the best monsoon in almost 55 years. The healthy monsoon is aided also by the fact that the government has taken several measures in order to boost the demand. The low interest rate scenario, that is another thing that most of the analysts and experts believe is something that would help the economy pick up pace. And the policy continuation that we have with the election of the NDA in the elections which just happened earlier this year, that provides a certainty going forward as well. So that is something that would be a positive. As far as the input cost trend is concerned, that largely remains benign. Crude oil prices, they have remained close to flat over the last 1 year period, and that is something which is a big positive. But volume pickup is the most important thing going forward. Most of the slowdown or most of the negatives seem to have been already baked into the price, but going forward there is positive that most of the brokerages and experts are picking. But that apart, one of the other space from the consumption pack is the consumer durable space. Sharad, what are you picking?
Well, yes, Yash. So this is basically a bit contrarian, to the overall consumer sentiment. So the BSE Consumer Durables Index rose almost as high as 40% in this Samvat, with the top gainers being Whirlpool, Voltas on a strong AC sales, but the top laggard being Bajaj Electricals, which had a big drag because of its EPC project business. Now, during the summer, what is expected, what was performed was the strong sales was seen in the summer quarter because of high sales in inverter ACs, and also the sector remained positive despite the overall sentiment being negative in the consumption space. Apart from this, the lighting segment did suffer due to price erosion and market pressures, and also the slowdown in government spending impacted the growth. Apart from this, what we expect in the new Samvat is that there will be a moderate growth for the non-AC appliances, and also primary AC sales will be higher than the secondary AC sales. So apart from this, Yash, what has happened in the paint sector?
So paint has been one sector that has managed to outperform the market, and they have been, sort of immune to the slowdown that has taken place. So all of the three large cap paint names, they have managed to give strong returns. Asian Paints, Berger, as well as Kansai Nerolac, they've all gained anywhere between 35 to 60% in the last 1 year. Now, the most important cue is the sustained demand momentum. Now, we've seen most of these companies report double-digit volume growth in the domestic decorative paint business. Sure, Kansai Nerolac does have a higher share of the automotive industry or the automotive segment to its overall revenues, but then again, they have also managed to do fairly well. So that is something which the street really likes at the moment. That apart, in the first half of the year, there was input cost inflation because of crude oil prices being highly volatile towards the end of the year, and because there is that a quarter of a delay in terms of the raw material pricing, that did manage to weigh down on the margins in the first half. But then we've seen how crude oil prices have behaved, and that is something that has eased up considerably. Now, the most important cues going forward is the overall demand environment, and most of the companies, they have given a cautious outlook as far as the demand is concerned. But the biggest positive is that there is still the benefit of the shift from unorganized to organized with the implementation of GST. The product mix is something that is most important, and the trends as far as margins are concerned, there is a benefit as far as raw material cost is concerned, but the product mix has been slightly skewed for some of these companies in favor of the low margin products. And that apart, the automotive and the industrial coatings business, that is something which has been persistently one of the underperformers for most of these companies, Kansai Nerolac in particular, like I was mentioning. That is something that is yet to see any revival, but given the kind of moves that we have seen in the auto space, slowly and steadily should we see a pickup, that would be one area which is likely to do better. But talking and speaking about autos, Yatan Moda is here with us as well. What are the cues that you're picking up?
You should ask your dealers, because that view also does matter. But talking about Samvat to Samvat, the returns for the auto sector have been under pressure. Only two stocks are making in the green as far as the Samvat period is concerned. If you look at Bajaj Auto, that stock is up 18%, and Maruti is up 4%. This is vis-a-vis the entire auto sector, the Nifty Auto, which is down by about 13% to last Samvat. In terms of top losers, the list is long, but talking about the top losers, Ashok Leyland as well as Tata Motors, the commercial vehicle players have seen some bit of pressure on the sales because of the lower economic activity and the consumer sentiment. In the auto ancillary space, the damage is equal. In terms of Motherson Sumi and Exide, both of these stocks down over 30% as far as the Samvat to Samvat period is concerned. Of course, the factors which have impacted the overall auto slowdown is clearly the consumer sentiment as well as lack of liquidity, according to the companies as well as brokerages. Of course, because of the slower demand, dealerships are also under pressure as inventories rise. Higher discounting we have seen in the second quarter have been damaging the operating performance of auto companies, and clearly this time post the Dussehra period, the Diwali period, the start to Diwali has been weak. So the festive cheer clearly is missing at this point in time. Moving forward, the auto companies are hopeful that the second half of this financial year should be good in terms of recovery. Lower steel as well as commodity costs are likely to provide a fillip to the overall margin picture. Of course, BS6 is one transition towards the emission norm, which will impact the industry in terms of the disruption that we could see, and the costs could be higher because of the BSC emission norms, which kick in from the next financial year, which is April 2020. And electric vehicles is one space to watch out for, because there is a lot of excitement and buzz in the marketplace with regards to this. But aviation is also one sector in focus. And Somit, kindly tell us what exactly is happening to the aviation sector.
The most important event in the aviation sector in the last 1 year was the shutdown of Jet Airways, because that led to higher ticket prices and a strong passenger growth for the other players, that is SpiceJet and Indigo, among the listed players. However, the benefits of this were short-lived, because if you see, the economic slowdown has started to impact the ticket prices and the passenger growth for the aviation industry. Right. Even if you see Indigo's commentary in the second quarter of financial year 2020, they said that the revenue growth during the festive period has been subdued, and which clearly says that there has been some pressure because of the economic slowdown in the aviation industry also. However, a faster expansion into international market is something that one needs to watch out for, because that will provide the next leg of growth for the aviation listed aviation companies in India. Along with that, privatization of Air India is also another important event one needs to watch out for, because if any foreign player comes in or if an existing player buys Air India, then the entire dynamics in the aviation industry will be changing. So these are the three important factors one needs to watch out for the aviation space. Well, with that, let's say focus the media and the entertainment sector, and we have Forum joining us to give us more details on the same.
Yeah, so it was a mixed bag for media and entertainment sector, with the cinema companies reporting strong performance, while for media it was a subdued year. Zee and Zee Sun TV and Zee Sun TV and TV18 were some of the companies which were top losers, while PVR and Inox were the top gainers in the year gone by. So for multiplexes, strong content pipeline and improvement in F&B segment was what drove growth. Lower penetration in the sector and robust expansion was also something which led to strong performance for the companies. Now coming to media, restricted ad revenue growth due to macro environment and negative impact due to free-to-ad channels was something which led to a degrowth for the companies. Now coming to the year going forward, strong performance is expected from multiplexes due to the higher increased content pipeline as well as lower density in screens, which provides opportunity for expansion. For media, advertising upscales and expectations of gains from new tariff order is something which will drive performance for the companies going forward. Now coming back to Samvat on the telecom sector.
Well, it was an eventful year with Jio becoming the India's largest telecom operator when it comes to revenue market share, while Vodafone Idea continued to struggle in the last 1 year. Another key event that happened in the last 1 year was Reliance Jio started to charge for the voice calls for the first time since it began its commercial operations 3 years back. Now, it was in form of IUC recharges that Reliance Jio brought in. Along with this, the commercial launch of its broadband business was also another key important event that happened in the last 1 year. However, Airtel continued to outperform on this front because of the debt reduction plans of the company, and along with this, the continued 4G subscriber addition that the company has been doing in the last 4 years. However, going forward, the competitive intensity in the sector needs to be watched out for, because that is continued because Jio is continuing to keep the competitive intensity high in the sector. Along with that, the industry health needs to improve, because the balance sheet is already stretched for all the telecom operators. So that is one thing one needs to watch out for, which is a key important thing, because if the industry health doesn't improve, the telecom sector's revenues are not expected to improve. Shifting focus to IT and pharma. Darshan, what will we be covering first, whether IT or pharma?
Yeah, so on the IT front, it hasn't been a very good year, actually gave flat returns, and one of the key reasons for that is Infosys, because that has dropped almost 15-16%, and if Infosys weren't there, the IT index could have done much better. Infosys, Tata Elxsi and Hexaware. Now Tata Elxsi is reporting weak set of numbers over the past few quarters. Hexaware cut the guidance. So overall, there seems to be issues as far as the IT space is concerned. Some of the counters like TCS have managed to do well. In terms of what's happened in the past 12 months, obviously there has been pressure on the revenues over the past 2 quarters. The margins have been under pressure over the past 2 quarters. Even the large cap, mid caps have been performing poorly, at least on the financials, at least for the past 3-4 quarters. But at least for the last 2 quarters, the large caps have also started failing in terms of the number of deal wins, the margins. Some bit of recovery seen in the financial services and North America market. What can we expect going ahead for them? Again, you know, there could be issues for some of the IT companies. So the focus will remain on digital, and that's what most of the companies have said. Adoption of services like artificial, cloud, all these are the new services which probably will lead to, you know, a newer source of revenues for the IT company. Now, pharma, it's been a bad year because the index itself gave negative returns, almost close to double-digit revenue, almost 20% fall from the last Diwali. So there is a clear bit of indication. Only 2 stocks in the index, in the Nifty Pharma index, gave positive returns. That was Dr. Reddy's and Divi's Lab, and both of them were company-specific. But some of the companies like Glenmark, Aurobindo Pharma, Sun Pharma, given the fact that the financials have been weak, given the fact that there is adverse US FDA issues, all of them gave negative returns. How was last year for the pharma companies? Yes, definitely it was a weak quarter. Some of the export-oriented companies faced competition and price erosion. So the play has shifted to MNC pharma companies, which have done extremely well. Companies like Abbott, Abbott, AstraZeneca are trading at record highs. Domestic players, like an Alkem, have performed much better. But the negative US FDA action is hurting the sentiment of the companies. What can we expect going ahead? Like most of the companies that we spoke to post the earnings have indicated that the pricing has bottomed out in the US markets, but it's not a generic play anymore. Most of the companies that we spoke to have indicated that the focus will shift to branded and specialty products for them to grow. But at least for the next few quarters, it seems that the pressure will stay on the pharma companies. But another important sector that we need to address is the banking sector, especially the distribution that's seen between the private sector banks and the public sector banks. So Shefali will talk to us. Shefali, tell us how the private sector, public sector banks have performed, and also a word on the NBFCs, which has been under tremendous pressure.
It was a very tumultuous time period for the financial services industry. But despite that, the Nifty Bank Index on the whole managed to deliver returns of about 13 to 14% in last 1 year. And some of the banks and NBFCs individually did very well. So starting with the top gainers in the banking space, Kotak Mahindra Bank delivered returns of about 42%, followed by ICICI Bank, HDFC Bank and Bandhan Bank, which gave returns of about 26 to 28%. And no prizes for guessing. The top loser was Yes Bank, which tanked by about 77% in last 1 year, and RBL Bank, which slipped about 50% in last 1 year. And what were the main factors that led to some of these price actions? So basically, it was asset quality concerns that led to price erosion in some of these banking names. Some of the names which we could not have imagined earlier, such as the SL Group, ADAG Group, all these groups came under pressure and put pressure on the banking stocks as well. And what can we expect going forward? Corporate asset quality continues to remain a concern, and even the retail asset quality remains to be on the watch. And going forward, we would be looking forward to improvement in the macroeconomic environment, which might provide a bit boost to the overall demand, led by some initiatives by the government. Now coming to NBFCs, so we are all obsessed about Bajaj Finance, but that was not the top gainer. The top gainers were Manappuram Finance and Credit Axis Grameen, which gained about 87% in last 1 year, and Bajaj Finance followed with about 72% returns, and HDFC came next with about 18% returns in last 1 year. Top losers, again no prizes for guessing. DHFL tanked about 92% in last 1 year. After that, Indiabulls Housing Finance, which went down by about 75% from last Diwali. And what were the factors? IL&FS crashed, and along with it, it took the life of some of these NBFCs such as DHFL, and most of the NBFCs which had focus on the real estate sector, all those NBFCs came under severe pressure. So going forward as well, we would be keeping an eye on the revival of the real estate sector, which in turn might or might not change the fortunes of some of these real estate sector focused NBFCs, and some of the consumption focused loans NBFCs such as Bajaj Finance, and especially some of these NBFC MFIs might continue to lead the gains. And but however, what took the breath away in last 1 year was clearly the insurance sector, especially the life insurance, and Forum will tell us more about that.
Yeah, so insurance stocks clearly outperformed in the year gone by. All the three private players, ICICI Prudential, HDFC Life and SBI Life, came up with strong performance. So the under-penetration in the sector, strong earnings and attractive valuation is what drove growth for the companies. So going forward, increased focus on protection segment as well as balanced product portfolio and widening distribution is something which is going to drive growth for these companies. Now moving on to Nikki on how was the year gone by for metals.
Second bad year for metal index, 30% down almost from this Samvat to the recent one. If you look at how the year was, it was completely an eventful one. US trade war tension pretty much weighed on the sentiment. Global slowdown weighed. Domestic demand was pretty much weighed on the kind of demand. Given the kind of auto slowdown that we saw, also we saw in some amount of subdued activity coming on account of the election period, which also had some impact. Having said that, let's highlight the trend that we've seen. Steel space, that was the worst performing space as compared to that of non-ferrous, clearly on account of the surplus situation that the industry as a whole is witnessing. Deficit in aluminium zinc made the trend relatively better for non-ferrous space as a whole. But then if you look at the issues, they pretty much slow progress on both regulatory issues like Donimalai, and also we saw lack of progress, or rather slow progress coming in on the insolvency proceedings. In terms of top losers first, as I just mentioned, it's the steel stocks which have actually topped the list of losers out there, be it in the like of Tata Steel, JSPL, or for that matter, even SAIL. These are the top losers. On the flip side, you had something on the tubes and the pipe makers, which pretty much did well. What we do expect for the coming Samvat is, in that case, will be a clear resolve coming in on the trade war tensions and the recovery on back of that in metal prices. A little bit also got to do with the fact that there would be some revival coming in on the sentiment. And in terms of trend, we again continue to expect non-ferrous industry to continue to do better as compared to that of ferrous industry. Having said that, Samvat, would you want to take us about oil and gas sector? How is that done?
Well, it was the volatile crude prices that have impacted the sector. Now, this has not only impacted the upstream companies, but also the downstream companies, because their earnings have remained volatile because of this volatile crude oil prices. Along with this, the privatization was the second key theme that played out in the last 1 year. Now, Government of India is looking to sell its entire stake to a private-owned foreign entity in BPCL, and because of this, all the oil marketing companies have seen a valuation re-rating in the last 1 year, and that's the reason the top gainers were BPCL and HPCL in the last 1 year. Now, going forward, this privatization theme is expected to continue, because investors will be keen to know who is the foreign investor which will be buying stake in BPCL and at what price, because the entire valuation of the oil and gas space depends on the privatization theme that is expected to happen. Along with this, implementation of IMO 2020 starting Jan 1st, 2020 will be the second most important thing to watch out for, because that is going to boost the gross refining margins for the oil marketing companies, which have been already dampened because of higher freight cost and because of weak demand. So that is another thing that we need to watch out for. Moving on to Nikki, how is the cement space?
We saw pretty much consolidation trend happening for cement space as a whole. Demand was pretty much subdued. Pricing discipline, however, remained strong for the industry. North and central region, they were the key regions where we saw some amount of uptick coming in. In terms of south as well as east region, there is where the price declines came in from essentially, but then volumes pretty much remained subdued for the entire financial year on account of the liquidity crunch that we saw in, and also some amount of election activity which had some bearing. Having said that, let's actually highlight the top gainers on the list out there. We saw north-based companies, something like JK Cement, Central Region Heidelberg Cement, pretty much making it to the Shree Cement, for that matter, making it to the top gainers list. On the flip side, you had south-based companies, essentially something like India Cement, for that matter, also doing extremely bad on account of the lower realization that we saw in. What we do expect in the coming financial year is some amount of recovery to come in, price discipline to stay, and also we expect some amount of consolidation essentially happening in east, given that Imami is being put on block, and we expect some kind of resolve coming on that. Having said that, Sharad, you'd want to come in on power sector?
Yes, definitely. So the power sector definitely had a muted kind of a growth, during this Samvat. Now, if you see the top performers, Adani Transmission and Adani Power, both of them were actually top performing. This is based on the news that their coal prices, imported coal prices, have actually come off, and also Adani Transmission has won some important projects in the Maharashtra circle as well as the Gujarat circle. Apart from this, Tata Power remains plagued by its Mundra issue. Now you see what the reasons have come up for the Samvat for the sector. You see that power generation has been impacted by the slowdown in the economic activity, and also an extended monsoon has been seen, and the discoms are also facing issues owing to the implementation of the payment mechanism. Now going ahead, what we expect in the Samvat, we firstly see is that there's going to be strong, firm regulatory changes are expected for the industry, and also there will be a softer demand will continue over the next 3 to 4 quarters, as the analysts are stating. And apart from this, something which we'll be watching out for will be the new Electricity Act, which will be put in the winter session of the Parliament. Speaking of that, what this year a lot of buzz was there in the primary markets. So how the IPO has shaped up during this Samvat Summit.
It was a good year for the IPOs. If you see, out of the 10-13 IPOs that have come in the last 1 year, only 2 have been trading below their issue price. I'll talk about them first. Sterling and Wilson, which is trading around 24% 2% below their issue price, and that is because of a weak order book. And the second loser was MSTC. This was because of a weak financials and lower growth that we have, that is expected to come in from the company, that is MSTC. But among the gainers, IRCTC is the top, has topped one with the issue price for the share of this IPO was around 320 rupees, but currently the share prices are around 900. Now this is on the back of cheaper valuations and strong growth that is expected from the company. This is followed by India Mart Intermesh, where the stock is trading at least at 100% above its issue price, and that is on the back of a strong growth that the company has seen on its financials. Along with that, increasing number of paying suppliers have also aided the company's growth. Among the other gainers, there was Affle India, Neogen Chemicals, and Metropolis Healthcare. With that, Darshan, let's wrap the show and tell us about how Indian markets have performed when compared to global markets, and what are the key global events that we need to watch out for.
Yeah, so basically, if you held good quality stocks, you won't be disappointed, because while the mid cap and the small cap end of the market did manage to disappoint, the Nifty and the larger caps, especially the high quality stocks, managed to do well. So the Nifty is one of the best performers, at least in dollar terms. The Brazilian markets was up 17%. We've managed to do almost 12%. So we've given double-digit returns over the last year. Kospi was the only one which has given negative returns. So overall, if you held, and the mid cap and small cap end of the market, no doubt, has seen pain, but the quality high company have actually managed to do well. But with that, it's a wrap on this special edition. Thanks for watching, and from the entire team from BloombergQuint, we would like to wish you a very happy Diwali.